Good morning. Good morning. How are you? Okay. So today's morning streaming session, we're going to do something a little different. I am going to show you some slides on a PowerPoint. Okay, so let me just make the agenda clear. What do you call this? Stream? On this stream. Good morning on this stream. Oops, I'm not allowed to capitalize. Sorry, Lenny. Ooh, Lenny's very... Ooh, you can't capitalize. Sorry, Lenny. On this stream, we will look at the Wednesday. What's the word I'm looking for? Scenario analysis. Okay. All right. Hey, I changed T-shirt for you. Let's get going. And you can all hear me. All good. Just a quick good morning to Lenny. Thank you for always being our vigilante. Good morning to all of you traders. I hope you're well. I hope that you slept well. I hope that you caught my dumb moment this morning where I called for a long in the FTSE. I personally made about 30 odd points from it. It was a good trade. And I somehow in that, it's been a bit of a reoccurring theme lately. I'm so excited about something and then I forget that I may actually post it. I'm sorry that I capitalized. Maybe Lenny needs to put me on a timeout for 300 seconds. Lenny, feel free to. Dare you. Double dare you, young man. It's just, Rita, it's a thing that Lenny has. If you're capitalizing, you're shouting, and we can't have shouting here. It's all very, it's very Zen-like, you know? Anyway, let's move on. I'm short. I've taken some profit in the DAX, but still got this bad boy here. It's looking pretty good. And otherwise, I don't think I have that much to report. What I want to focus on is two things. Why are we short the DAX? Okay, so in order for me to illustrate why we're short the DAX would be, I think the wisest thing to do would be to say, let's take a look at a 10-minute chart. Now, bearing in mind that I had expected the markets to be buoyant this morning, basis on what I saw in the FTSE, yet it seemed as if from the very early get-go, the first couple of bars, the FTSE was moving ahead, but the DAX was not moving ahead at all. Then you're seeing this long bar here, and I didn't catch that. But what I was ready for was to try and short any kind of retracement, and that's what we got here. So right now, I only got half my position left, but I am okay with that. It's not the end of the world. I'm also out of my long position in the FTSE. I am not short though, but there you go. Today we're going to talk about, where is it? Is it this one? Why is it not showing up? I don't understand. Got the power. Why is the PowerPoint not showing up? Come on. There we go. All right, I think I'm ready. And I think you can see it as well. So what you're seeing here is my, obviously this is in Danish, but don't worry about that because the rest of the rest of the presentation is actually in English. But it's basically, this says hard statistics for stock index traders. And the first thing I would like to talk to you about is the realities of trading. So the reality of day trading to me is incredibly interesting because we may not realize this, but say you, let me start off by explaining this chart here. This is the data of the Dow Jones index for the last 30 years on closing prices. And what you are in reality seeing here is the amount of times that the Dow Jones closed in positive territory for the day, and the amount of times that Dow Jones closed in negative territory for the day. And then how big a percentage did it close into negative territory? And how much did it close into positive territory? So you'll see that there's some outlier events where the Dow Jones closed really high for the day and it closed really low for the day. But otherwise, the bulk of the observation is in the middle. What I find is interesting, I'm just going to go on camera here to illustrate this point for emphasis, is what I find incredibly interesting is that when you have 30 years of Dow Jones closing data and you segment it into, well, how many of those 30 years? And 30 years is, assume that we got 250 trading days in a year times 30 will give you 7,500 data. So I analyzed 7,500 trading days worth of data and I segmented it, and I came to the conclusion that the odds of the Dow closing up on the day or closing down on the day is 50-50. To be exact, it's 49.6 versus 50.4. And I find that interesting because 30 years ago would be 1991, thereabouts. And I think this data actually goes to 1987, so it might be a bit more than 30 years. Is that the Dow was trading at 2,000 about 30 years ago, 1,500, 1,700, and today we're trading at 34,000. And so there has been an inflationary growth in stock indices. Yet, what I find so incredibly interesting is that despite this enormous growth, the odds of the Dow closing up on the day or down on the day is still 50-50. So let's go back to the PowerPoint presentation, because I think the ramification for that is that even though you are in a rampant bull market, you still have to treat the index as if, well, it could go either way, up or down. I know that's a very simplified way of looking at things. This is a very long PowerPoint presentation, and I'm not going to go through this. This is my proprietary research. By all means, profit from it, but this is mine, and mine to keep. So I'm just going to go to the relevant slides. I'm just going to put on a pause screen. I think actually this is relevant. So the way that I work is I ask myself questions such as, how often does the Dow gap up or gap down in a year? Is there any truth to the saying that as Wednesday goes, so too goes Friday? Does it help to know Fibonacci as a day trader in the Dow? How often is Monday the low or the high of the day? So the point I want to make is that as part of me and my evolution as a trader has been sitting on the sofa, basically, watching some crappy TV, and actually the mind is going, I wonder how often the Dow makes a high on a Monday and then it starts trading lower for the rest of the week. I wonder what if Thursday is the high of the week and Friday is a secondary high? How often does that affect in lower prices on a Monday? And so forth. And this is about asking questions that are piquing your curiosity. And what I would like to talk to you about today is this bit here. How often is Monday the high or the low of the week? So it isn't often that Monday marks the high of the week or the low of the week. And in a moment, after we've gone through this initial research, I'll show you a much more important pattern. For now, I'll state the facts. Over the last year, Monday has marked the high of the week or the low of the week 31 times. That means that 60% of the time, the Monday, and this is, and I just need to quantify that very quickly. When I say over the last year, this presentation is pre-COVID. I did this presentation in June and again in September in Copenhagen and in London, and although I don't have any reason to expect that the data in any shape or form have changed, just bearing in mind that I haven't updated this. I've just been busy trading what I saw. This work that I'm showing you here is the kind of work that I do while I'm waiting for my positions to either stop me out or make me a profit. So 31 times Monday has marked the high of the week or the low of the week, which accounts for 60% of the time. Now, as I'm saying here, this information by itself is not particularly helpful. But say that you are preparing to trade on a Thursday and you see that Monday so far is the highest day of the week. Could that help you? The results that I'm showing you are basically manually tested. So I've asked myself some basic questions. If Monday so far is the highest traded point for the last 3 days, i.e. Monday, Tuesday, Wednesday, then how often is Thursday going to trade below the low of Wednesday? And I found there were a total of 25 times where I was faced with this possibility. So in other words, out of a full year, about a sample space of approximately 52 weeks, I found that there were 25 times where Monday was the high and then Tuesday and Wednesday traded below the high that we saw on Monday. That doesn't mean that Wednesday couldn't be higher than Tuesday as long as Wednesday was still lower than the high made on Monday. And then what I found incredibly interesting was that out of those 25 times, the Dow traded below the Wednesday low a total of 21 times. So, and to me, that's an important piece of information because I feel that gives me an edge, that I can come to work on a Thursday and say, okay, Monday so far is the high of the week. What does that give me in terms of scenario analysis for the Thursday? Well, out of the 25 instances where this particular pattern or scenario has unfolded 21 out of those 25 times. And that, I think you'll agree with me that 21 out of 25, that's a fairly compelling statistic in the sense that it would give you a ratio of 84%. So there's an 84% chance that you will see the market dip below. That doesn't mean that you can just come to work on a Thursday morning and bang, let's short this shit out of the Dow. It doesn't work like that. But it's a bit like a hymn sheet or a fact sheet. We go, okay, maybe I shouldn't be so enthused by the fact that the Dow is up on a Thursday if Wednesday's low hasn't been surpassed. Does that? I hope that resonates with you. So let me sort of give you some examples here. So here's Monday, and here is Tuesday, and here's Wednesday. So Tuesday and Wednesday fulfill the criteria that neither of those managed to get above the high of Monday. And then we get Thursday, and Thursday makes a new low, and as such the pattern has now been completed. Here's another example. Monday marks the high, Tuesday makes a lower high, Wednesday actually goes above the high of Tuesday but not as high as Monday, and then Thursday comes here, we're making a new low. Right? So here's a sort of kind of a different kind of example. Monday was a holiday, Tuesday was very weak, Wednesday managed to not get above the high of Monday, although I'm always careful of how much emphasis I put on a holiday trading session. And then Thursday down again. And here's a very nice example. Monday, Tuesday, Wednesday, and then Thursday. And here's another example. Monday high, Tuesday lower high, Wednesday lower high, and then Thursday. And here's some calls that I call some close calls. Monday high, Tuesday lower high, Wednesday lower high, and then Thursday. Can you see here how Thursday technically is not actually going below Wednesday? Now, to me, this should be treated as this didn't quite work out. But I still think, maybe I, as a trader, need to take into account the incredible sell-off that happened late on a Wednesday. And I'm not trying to justify my results by patching over the examples that didn't work. If we're going strictly by what we're seeing here, then this is a pattern. This particular example didn't work out. But it's also really important to note that in those cases where it didn't work out, you tend to get a beautiful trend day. Okay, so that was sort of a taster of the kind of work that I do, and I hope that you can understand my frustration when I get the trading gurus of the world that are talking about their trading setups and how they're using Bollinger Bands or fundamental analysis. And to me, all they've really done is they've taken existing work and then they sort of rehashed it in their own words. And I won't mention names this time. I think I've learned my lesson. I should just keep doing what I'm doing. But I don't think it's particularly original when a helicopter flying guru goes on a stage and start talking about Bollinger Bands, because it's such a worn topic. I think that if you truly want to charge people something, go and show them some work that hasn't been done before, that hasn't been shown before. And with that in mind, let me show you what I call the Monday benchmark, because I think that the Monday benchmark is an interesting pattern to be mindful of. You see, for me, Monday marks the first day of a new cycle. We've had the weekend to come to our senses, or maybe come to our senses both for better or worse. And sometimes this means that whatever happened on the previous Friday is forgiven and forgotten, and sometimes the market will continue what it did on Friday. Now, I've never wondered if Monday was a good weather bell for the rest of the week, because I kind of dismissed the idea that Monday had any predictive power. But part of being a researcher or a trader is that we ask tough questions. We ask tough questions that we research, but we also ask tough questions of ourselves. So, well, how as a trader can I improve my performance? What behavior is shaping my trading decisions, and is that conducive to my trading account? Those are tough questions to ask. It's so easy to sign up for a weekend course and think that they're going to fix all your problems, but the reality is that they're not going to fix your problems, not by a long shot. So true growth comes from that quiet solitude where we ask tough questions of ourselves. However, true growth also comes to developing our own approach to the market. And I think as part of being a trader means that we're also part researcher. And that is that we ask odd questions. Yeah, I've emphasized that. Let's ask odd questions and test them. So I've tested this question: what happens to Wednesday? Which I think you'll agree with me is kind of relevant for right now, because, hey, surprise, surprise, it's Wednesday today. What happens to Wednesday if Tuesday isn't able to build on what Monday did? In other words, what if Monday was a good day, or even a mediocre day, or even a negative day, and Tuesday was unable to get above the highs of Monday? Would this statistically suggest bad news for Wednesday? Would traders come to work on Wednesday and argue that now the market was cheap, or would they press the short side? And I'm just going to re-emphasize this. Would traders come to work and say, "Ooh, the market is oversold"? Yeah, do you remember this expression from the oscillators and the MACDs and the RSI? And people come on TV and they go, "I think the market is oversold." Really? How can something be oversold? The market is supposed to reflect fair value at all times. Buyers and sellers are meeting in the middle to conduct a transaction. How can it be overdone? I mean, then couldn't you argue that the Dow Jones is overbought, considering that 30 years ago it was trading at 2,000 and now we're at 34,000? Yes, I know I'm probably being a little bit draconian, and you know as well as I that there are times when you think, okay, this has got to be oversold now. Like down in March, April last year, you're thinking, Dow has fallen 40% in a month. Well, if this carries on in the next month, there won't be a stock market by June. Kind of thing. So you can think, well, maybe we are a little bit oversold there. But sort of on a day-to-day, this whole oversold, well, that's how trend days happen. And trend days and being on the right side of a trend day is one of the most beautiful experiences as a trader that you can have. It's like a religious experience that where you sold short the market and it just keeps falling all day. And you think to yourself, how much money am I making here? This is amazing. But if you haven't trained your mind to accept trend days and that something can get a lot cheaper, then you're not really emotionally positioned for the ride. Okay? So back to the statistics. Would traders come to work and say, "Oh, now the market is cheap," or would they press the short side? Well, let's take a look at some examples. Here's Monday. Monday closed at its high. Beautiful trend move up. Actually, it's a bit sneaky here because you can actually argue that Tuesday is making a new high, but I've sort of just dismissed it a little bit because I think it's so marginal. And then Wednesday, well, Wednesday is just weak from the outset, and it makes a superb trend day. Let's take another example. Don't know what happened there. Sorry, let's just ignore that. Hang on, have I? Okay, here's Monday. Tuesday wasn't as high as Monday, and that sets about in motion a beautiful trend day on Wednesday. I think I'm kind of mixing up a couple of presentations here. I think I'm throwing you material which has also to do with the trend day. Sorry about that. I think some of these slides need tidying up a little bit. Let me just check that the next one. Okay, let's carry on. Here's Monday. Actually, let me just check in with you guys. So let me just ask you something here before we carry on. Are you guys okay? Are you guys all right? Am I? Yeah, you're all good. Yeah, everyone's all right. Hey, I needed to just tune in because you know that feeling where where you're talking to people and you don't know if they're actually listening, and you have no idea. It's not like being in front of an audience and you go, "Hey Steiner, how you doing? Good to see you. Okay, you're understanding." Or, "Hey Johnny, hey Lenny, hey," etc., etc. And then here you're just talking into this camera, and you go, "Well, I don't know if you're bored out of your skull, or are you with me?" So I'm just tuning in. Okay, I'm just checking in, see if you're all right. All right, let's get back to it. So back to it. Monday, Tuesday, and then Wednesday. Wednesday is only weak initially, and it doesn't set in motion a good trend day. What I love about this particular segment right here is how much it reminds me of the DAX the other day. Could have drawn a beautiful trend line here on a larger time frame, and then there was a good ride up here. Yes. It always looks easier after the fact, doesn't it, ladies and gentlemen? It always looks easier after the fact. Let's take another one. Monday is strong. Tuesday makes a lower high, but Wednesday never gives us that. What we had hoped for. Instead, it sets up a very strong trend day after attempting to fill the gap. Now, I'm pretty sure I have some stats on how often this happens, but I think let me just go through it. Maybe this one is worth talking about. Monday is high, Tuesday is a low high, but look at Wednesday. Very strong, and then something goes wrong and we get a trend day out of it. I was kind of hoping that I would get to the stats. Oh, here we got Monday. We got a lower high on Tuesday, and then Wednesday, it simply doesn't work. We don't get the weakness at all. Another possibility is that Monday is the high, Tuesday is a lower high, and then Wednesday we get a gap up, and then we begin the descent for lower Wednesday. My point here is that once you have this pattern, and this is the pattern that we've seen this week, is that we have a Monday high in the Dow, and then we have a secondary high on the Tuesday. Let me show you. let me just prepare this slide for you. It will take me a couple of minutes. Monday. You can't see anything right now, so don't worry. You can just see me typing. Okay, and then into a PowerPoint, like this one here. I'm just going to, and then double check that you guys can see it. So here we go. Can I? How do I do that? There we go. I will duplicate this slide. And then I'll take away this. And this. I'm sure some of you IT savvy guys are thinking, what the hell is this man doing? We gotta teach him some basic IT skills. Here's Monday. This was the day before yesterday. And here's Tuesday. And as you can see, Monday so far marks the high of the week. Tuesday. So my argument then goes, well, with this kind of pattern, we really should be expecting lower prices on Wednesday. Okay. I wonder if I can. So this is the what I'm a bit annoyed. I've lost the data for how often this happens. So you're gonna have to get that in another session. The next pattern is if Thursday is higher than Friday, then what does Monday look like? And that is the pattern that I have spoken to you about and I haven't shown you yet, is what I call the Thursday, Friday, Monday pattern. And I think that that's, at this point here, is a this is an opportune time to pause and reflect and take some questions. I will go through the Thursday, Friday, but not in this streaming session. I want to do it at either this afternoon or at a later date. But all of this is recorded, so you will be able to dig this out for yourself. I just want to get back to trading because the market looks pretty weak to me. People are talking about DAX and FTSE buy signals. I don't know why you're saying that. It looks pretty weak to me. You have to be mindful that when the FTSE makes such a strong rally higher in the morning, go to this pattern here is called a trapdoor pattern, ladies and gentlemen. It is everybody has been trapped. Now, I myself was long, but I am out of that long position a long time ago. And it did concern me right from the morning get-go how weak the Dow was. All right. We'll get there. Yeah? We will get there. Okay. Some people are asking about the 28th of June. I've already recorded a video about this, so I don't think there's need to be a repeat of that. All I can do is I can say, well, the pattern is still active. It has 12 days to make it up there. I am reading your questions. Do you use a maximum number of retraces to decide not to step in anymore? I don't know. Gonna have to think about that. My statistics is not based on the DAX. Please. You must pay attention. It was the Dow Jones index. That's why I started by saying that the data is conducted on 30 years of Dow Jones index data. I'm alright, man. Thanks for asking, Active Design. We have a 40-point winner in the DAX. We're doing well. Thank you, Lenny. It's quite alright. How do you determine which points are valid support and resistance? You do what everyone else is doing, young man. You just draw a horizontal line. Can I elaborate on the trapdoor pattern? Sure. This is a trapdoor pattern. This bar that you're seeing here means that everybody is buying the breakout. This is a real classical breakout pattern, but I call it a trapdoor if the breakout pattern fails and everybody's now on the wrong side. And where it gets crucial is if the market trades below the low of the breakout bar. I call that a breakout pattern. No, a trapdoor pattern. God, my ear hurts. Been too much diving. That's a trapdoor pattern. Okay. That concludes today's live streaming. So let's just round up here. I had a beautiful FTSE trade. I hope that you caught the hint, even though Stupid here didn't post it because he was so excited. I think my elaborate explanation was warranted enough that you should have been wised up to. He probably wants to be low. And then we got a DAX pattern. When the DAX, what we basically did was we shorted the first retracement that we had. And we got a bit lucky here. We actually hit that pretty well. Okay. See you soon, alright? Look after yourself. Stay strong. That Delta variant is running rife, I heard, in England. Things are not great in Malaysia, I heard. India too. I know there's a fair few of you from India. My heart goes out to you. Look after yourself and your loved ones. Right? We're here to make money, but doesn't mean we can't share a kind thought for one another. Stay strong, folks. Lenny, big shout out to you. You're doing so well. Thank you.